Good morning. Here's the FX Market Trend Report for June 1st. Last week, the expansion of liquidity provision by financial authorities in China and the United States continued. Bitcoin and gold prices also fell. The ceasefire negotiations between Iran and the United States remain uncertain, with both sides considering resuming attacks, but the negotiations are in their final stages. In Europe, NATO continues direct attacks on Russia. Russia is also retaliating with attacks on government institutions in Kyiv and other locations. The Baltic states providing airspace for NATO drone attacks is complicating the Ukrainian war. However, the blockade of the Strait of Hormuz during the Iran-Iraq war continues to deplete oil reserves in countries around the world's oil supply chain. Countries are increasingly agreeing that oil shortages will become the norm, even if the blockade is lifted. The Clarity Act, passed by the U.S. Congress, has put an end to the debate over whether cryptocurrency is a security or a commodity. This will lead to a massive influx of funds into the cryptocurrency market. However, the current market is reacting to this as a risk factor. This bill, coupled with the previously decided acquisition of 1 million Bitcoin as a strategic reserve by the U.S. government, will push for U.S. control of the crypto market. In other words, crypto assets will be incorporated into the dollar-based system, undermining the inherent independence of blockchain technology. Market participants have stated that the U.S. will buy Bitcoin, even if it means disposing of its gold holdings. This has caused gold prices to fall. However, the decline in gold prices suggests that money is shifting to commodity markets due to the collapse of global supply chains caused by oil shortages. Countries are beginning to weaken their currencies, and at the same time, the US, China, and Japan are increasingly likely to be exposed to concentrated currency appreciation. We predict the turning point will occur by this fall. This will be confirmed when forecasts for this fall's harvest and next year's planting are revised downwards. By then, energy concerns will reignite in Europe as winter approaches. And if the U.S. midterm elections result in a Trump administration endorsement, we must prepare for the worst-case scenario. 1. Currency pressure, RINDEX, selling or buying pressure on the currency in question in the market. 2. Exchange rate pressure RINDEX pair, the pressure difference between two currencies. 3. Correlation, PTN1, sell and sell, PTN2, buy and buy, PTN3, sell and buy. 4. Chart line display. Selling in the upward direction, buying in the downward direction. 5. Chart time series. A total of 16 measurements from the last weekend of the past 12 months and the most recent 4 weekends. Note, weekly updates focus on the pressure fluctuations of the previous week. This is displayed on the far right of the chart. This table consists of 3 parts. Charts of 5 major currencies enclosed in red boxes, charts of minor currencies enclosed in blue boxes, and stock and flow statistics of the optimal portfolio solution enclosed in black boxes. Chart 1, red box, shows the host Lindex of the table with a blue line, which hosts charts 2 through 50. Charts 2 through 5 show the remaining major currencies with red lines, while charts 6 through 50, blue boxes, show the minor currencies with red lines. Charts 2 through 50 show the market rate volatility with yellow lines, allowing us to see the pressure composition of the market rate. The optimal solution enclosed in black boxes ranks the Lindex stock and flow from the previous week against the market rate volatility. Furthermore, the ranking accuracy is confirmed with full bipolarization using PTN correlation. However, it should be noted that it includes fixed rates with diverse management. Please see the weekly flow statistics for the optimal portfolio solution in the lower right of the table. The ranking consistency between Lindex pairs and actual rates is confirmed by the complete polarization of PTN. Major correlations were as follows. USD was selling upwards, EUR was buying downwards, PTN3, GBP was selling upwards, PTN1, CNY was buying downwards, PTN3, and Yen was selling upwards, PTN1. Minor correlations showed that 20 pairs excluding USD, GBP, and Yen were PTN1, and 25 pairs excluding EUR and Yen were PTN3. The total table correlation, which is the sum of major and minor correlations, is 22 pairs at PTN1 and 27 pairs at PTN3, for a total of 49 pairs plus table currencies. This complete polarization of PTN is the same for GBP and Yen, as they have a positive correlation with the USD. Also, since EUR and Yen have an inverse correlation, PTN1 becomes PTN3, and PTN3 becomes PTN2, so the complete polarization remains unchanged. This is called the Othello effect, a marketability phenomenon where the currency will have the same Lindex value regardless of the pair. In other words, if the major correlation is reversed, the minor correlation is also reversed. Please see the previous week's flow statistics for the optimal portfolio solution in the lower right of the table. The ranking consistency between Lindex pairs and actual rates is confirmed by the complete polarization of PTNs. Major correlations showed that while the euro was bought on dips, the dollar, pound, and Japanese yen were sold on dips, PTN3, and the Chinese yuan was bought on dips, PTN2. Minor correlations showed that 20 pairs excluding the dollar, pound, and Japanese yen were PTN3, and 25 pairs excluding the euro and Chinese yuan were PTN2. The dollar table is reversed due to the Othello effect. Please see the previous week's flow statistics for the optimal portfolio solution in the lower right of the table. The ranking consistency between Lindex pairs and actual rates is confirmed by the complete polarization of PTNs. The major correlations were selling the pound upwards, the dollar and Japanese yen were selling upwards, PTN1, and the pound and Chinese yuan were buying downwards, PTN3. The minor correlations were 20 pairs excluding the dollar, pound, and Japanese yen were PTN1, and 25 pairs excluding the euro and Chinese yuan were PTN3. The Othello effect makes it the same as the dollar table. Please see the previous week's flow statistics for the optimal portfolio solution in the lower right of the table. The ranking consistency between Lindex pairs and actual rates is confirmed by the complete polarization of PTNs. Major correlations showed that while buying the yuan resulted in selling the dollar, pound, and Japanese yen, PTN3, and buying the pound, PTN2. Minor correlations showed that 20 pairs excluding the dollar, pound, and Japanese yen were PTN3, and 25 pairs excluding the euro and yuan were PTN2. The dollar table is reversed due to the Othello effect. Please see the previous week's flow statistics for the optimal portfolio solution in the lower right of the table. The ranking consistency between Lindex pairs and actual rates is confirmed by the complete polarization of PTNs. The major correlations were selling of the Japanese yen, selling of the dollar and pound, PTN1, and buying of the pound and yuan, PTN2. The minor correlations were 20 pairs excluding the dollar, pound, and Japanese yen were PTN2, and 25 pairs excluding the euro and yuan were PTN3. The Othello effect makes it the same as the dollar table. For watching. Have a wonderful week. This has been Taro Tanabe reporting from Japan.